What is up, YouTube? Welcome back to Stocks by the Numbers, and I wanted to quickly go over a couple of these big name companies here because I know a lot of people were waiting for them to put out their numbers, and they wanted to see if they wanted to take a position or perhaps bet against the company. And sometimes I just want to say that the stocks do not always react the way we think they're going to react. Good example is Netflix that I'm going to get to towards the end, which in my opinion put out terrible numbers and raised a red flag, yet the stock got rewarded. And basically same thing with Google and Microsoft. But right now, I just wanted to take a quick look here at Verizon. As you can see, this is a 1 month chart. Boom, you saw a big drop off, hit new lows here, 43.77, and in the last couple of days, seen a little bit of a rally. If we switch back over here, and we switch to our charts here, again, symmetrical triangle that I called down in a previous video. It broke the bottom trend line and started to drop down into the downtrend. Again, new low 43.77, slowly rose up, hit 46.5 today. Probably going to try to fill this gap. I don't know how long it's going to take to fill this gap back up to 49, but you're probably going to see this high 46, low 47s probably by next week, unless they pull it back and have it sell off again. Verizon numbers, they added 12,000 new subscribers. Analysts were predicting over 167,000 subscribers, so obviously that's a big miss there. Yearly EPS was lowered to $5.10 to $5.25. That's down from initial estimates of $5.40 to $5.55. And also, they predicted that revenue was going to remain flat for the year. Now they're looking at a 1% decline. So with the miss in new phone customers and subscribers, along with lowering guidance moving forward, this move is justified in my opinion. Overall, I do think that Verizon trades at a pretty big discount here. However, market cap is just slightly higher than revenues, yearly revenues that they bring in. However, if they're constantly missing on new subscribers, just like we saw last quarter when they got crushed 20% and hit new lows because of new subscribers, I mean, to come out, say the same thing again, and to state that yearly guidance has to be lowered and decreased, I mean, these are huge negatives. So that's what happens when the numbers come in light. And we switch over here to Meta. Excuse me. Meta, as you can see, last couple of quarters has been in a slow and steady decline, was up at around $300 a share. They've been dealing with a lot of stuff, and they've now pulled back to about the 150 range. And what we're seeing here is an EPS of 246 versus estimates of 254, and revenue of 28.82 billion versus estimates of 28.9 billion. So you got a miss on the top and bottom lines. Apparently it was the first quarterly revenue decline in 10 years. And that's funny because when I made the Meta video, if you come down here, right, look at that. I talk about slow, steady, consistent revenue growth year over year and quarter over quarter. And then they come in, with a big miss like this. Now, daily active users for the core network was up 3% to a little under 2 billion. Monthly users rose 1% to 2.93 billion. So I guess you can say that, the overall Facebook website and social network is still pretty healthy. However, the FTC, the Federal Trade Commission, stepped in and blocked Meta from buying a company called Within, which is a virtual reality gaming company. So that's obviously a negative. Total revenue down 1% to 28.8 billion, 29.1 billion, same time last year. So that's not a good sign. But also something that caught my eye, all you Instagram users. I don't have a phone. I don't really follow any of these apps. I'm not on social media really. But Instagram, apparently, they've developed something called Reels, which is to combat Snap and TikTok and compete with their competitors. And anytime you get touted when you go public to being quote-unquote, an innovating genius for the social media space, and now you fast forward all these years and, you're changing something like Instagram to be more like Snap and TikTok to compete with those companies that everyone thought was beneath you, that, in my opinion, that is a big red flag. So moving forward, again, this is just my opinion, I wouldn't touch Meta right now, but that's just me. That's just me. I want to move on to Google here, because Google Oh, also on Facebook, they did also state that advertising dollars decreased, saying that marketers are pulling back ad spending. So that also is another negative to add for Meta. But moving forward on Google, we look at the numbers here posted. 121 on the EPS side. Estimates were 127, 69.685 billion on revenue versus estimates of 69.8 billion. And basically, you're seeing a miss on the top and bottom lines. They also state that YouTube revenue came in light, 7.34 billion versus a little over 7.5 billion. And the cloud revenue overall came in at 6.28 billion versus 6.41 billion. So decreases across the board here. Seeing revenue growth for the quarter of 13% was 62% a year earlier, but of course that was the grand reopening after the pandemic shutdown and whatnot. Google search and other revenue stated at 40.69 billion, up from 35.85 billion a year prior, and they also stated that their full-time employees, their workforce, is up 21% to over 174,000 employees, up from 144,000. So I guess that's a good sign. However, misses on tops and bottom lines, and decreases in staples like your YouTube revenue and your cloud revenue, decreases in those revenue. Like I said, in my opinion, these are all red flags, but these companies are being rewarded. However, I will say market cap 1.5 trillion, last year's revenue of $250 billion, so they're trading like 6 times 2021 revenue, which I guess you could say is fair valued. I don't want to go and say it's overvalued, but also at the same time, looking at these negative numbers, I don't think I would have rewarded this company like they did, bringing them from 105 a share, and now they're up to 116 a share. I mean, I don't know if I would have saw that move. And same thing here with Microsoft. Now, Google was trading 6 times revenue. We're looking at 2.1 trillion in market cap, and you come back to, even if you look at 2022 revenue of 200 billion, you're trading 10 and a half, almost 11 times total revenue. So when people ask me about Google and Microsoft, I would have been more a buyer of Google because it was trading at a less multiple, and you can say that it's more undervalued than Microsoft, and Microsoft is possibly overvalued. But obviously that's not what we saw here. The company turned around after hours on that earnings call and popped 5% after hours, and then boom, has rallied up to the $280 mark when they were down at $250. That is a massive move in my opinion. And honestly, I think it's an overreaction. Now, I know they probably want to try to fill gaps and get the company back to where it was, but like I just showed with the numbers, trading almost 11 times total revenue, and they technically just missed numbers here. Look at this. EPS beat 223. Estimates were 229. And they came in below 52 billion in revenue. Estimates were 52.384 billion in revenue. So they missed by about $500 million. It's definitely nothing to sneeze at. And if you look here, it's the first EPS miss, it says, since 2016. They said they expect double-digit revenue and operating income growth. Cloud revenue from Azure and cloud services, revenue up 40%, was 46% the quarter before, but nice little increase there, touch below 21 billion in revenue from the cloud and Azure services. They increased their employee pay, which I guess is good if you work there, and they state that we are seeing larger and longer term commitments, record number of $100 million plus and $1 billion plus deals. And I think that statement in and of itself is what turned the stock around, because initially when they reported the miss, they were down, and they should be down. And then, they come out with a statement like that, and, people say, oh, well, must just be a short-term hiccup. Long-term, the company looks great. Guidance is good. So let's reward the stock and let's bring it higher. In my opinion, I would not touch Microsoft here at these levels. Based on the numbers we just went over for these few big-name companies, I'd probably be more of a buyer of Google than Microsoft, to tell you the truth. But moving forward, Intel comes in with a big miss here on revenue, missing by over $2.5 billion, posting $15.3 billion in revenue. Estimates were a touch below $18 billion. EPS, massive miss. And Intel is a company that has been struggling, and what I'm basically seeing is, like, every time they trip themselves up and come out with something negative, you have their competitors like the AMDs, the NVIDIAs of the world. They're just picking up the pieces, they're picking up the market share, and they're earning more and more business and basically taking it away from Intel. So Intel right now, I mean, you could say that the stock is undervalued. And I know, like, I would always look at the PE of Intel, like 6.6, and say that it's undervalued. But remember, we just looked at Verizon, which also has a low PE. However, if subscribers are going down and you're cutting full year guidance, you deserve to be lower. And that's basically what we're seeing here with Intel. Revenue was $15.3 billion, down 22% year over year. They did state that their network and edge group divisions are up 11% in revenue, and Mobileye recorded record quarterly revenue of $460 million, up 41%, which obviously is nice. However, gross margins of 36.5%, that is down over 20.5% year over year, which is definitely a red flag. And also, one of their staples as well, when I talked about YouTube and cloud revenue for Google, the data center and AI group revenue came in at $4.6 billion. That is a 16% decrease. So Intel, lots and lots of red flags, and I know the numbers are there if you look at it fundamentally, saying that it's undervalued. However, I think the company, really needs to do some revamping. And they might need to make some changes there, for the board of directors, and possibly reinvest more into R&D, which I believe they did compared to last quarter. I believe R&D investments did increase. However, I just think you're going to have to give it more time. And Netflix, the last thing to end on, you're looking at a miss here on the revenue side by about $50 million, and you're looking at a beat, though, on the EPS side. But the one thing that really, grinds my gears about a company like Netflix is all of their revenue and their whole business exists based on the number of subscribers that they have and they bring in. And supposedly they were expecting to lose 2 million subscribers, and they only lost like 970,000. So, they viewed it as a win, and they pumped the stock up. Now, when I made the video, I did say, according to the numbers, you could potentially see a rise here in Netflix if subscriber numbers are good, and that's the opposite of what we saw. Subscriber numbers came in at a loss of almost 1 million subscribers, yet the stock got rewarded and popped from, $188 and hit a high of $230. So if you happen to get in on Netflix at basically anywhere below $200, you're sitting pretty here with this short-term pop. And, in the next month or two, they could potentially regain this gap and get it up to the low 300s to fill that gap for you. But, long term, I mean, if people are moving away from Netflix and they're losing subscribers, I think it's going to be basically what we saw with Verizon. And I think long term, if they keep losing subscribers, keep struggling to remain and to keep existing customers, you're going to start seeing, full year guidance decreases, revenue decreases, quarter over quarter, year over year, and they're really going to start beating the stock up. So I know the stock is up in the short term, but in the long term, based on the numbers that, I just laid out, I personally, in my opinion, would not be a buyer of Netflix. But I know I was talking fast. I wanted to go over a bunch of these videos, a bunch of these companies in this video, and just try not to have it run too long. So if you have any questions, comments, or concerns about any of the companies I went over, drop it down in the comments section below. We'll have a little back and forth, or maybe I'll make another follow-up video on a few of these companies if you guys want. But once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Push the like button. Really helps me out, helps out the YouTube algorithm, get a few more eyes on the channel. If you like the content I'm putting out, subscribe to the channel. It really means a lot to me that you guys support me here, building a little community here. I really am grateful for that. But moving forward, like I always say, these markets are unpredictable. We had, Fed raising rates, and the markets basically exploded upwards. And like I always say, none of that makes sense. And usually after we see a pump, after a rate rise, we always see an immediate pullback, and we did not see that. So I just want everyone to stay sharp moving into next week, because we might see some serious volatility moving forward. But like I always say, markets are unpredictable and a little rocky, so I wish everyone success. I hope everyone makes a couple of dollars, and I will see you in the next video.